when we were starting these ventures back, as you mentioned, post the Distributed Ledger Group, the FAC, all these ventures, I didn't for a second think that it would be one of our funds that would be tokenizing. It was more the 20 or so blue chip fund managers that we were talking to over that journey that we anticipated would be launching their fund first.
This is Money Never Sleeps. Sharp riffs, big ideas, and real insights from smart people. I'm Pete Townsend. Let's go.
Money never sleeps, pal.
So my guest this week is someone I connected with back in 2015 when he was leading the post-trade distributed ledger working group. And then he and I keep reconnecting and collaborating in different ways through the years. Brian McNulty is now a partner at Lingfeng Capital's DVF, or Digital Venture Fund. Brian, welcome to the show.
Thanks, Pete. Good to see you again.
Awesome to have you here, Brian. Listen, if you told either one of us back in 2015 that in April 2026, you'd be ringing the bell at the London Stock Exchange to launch a tokenized venture fund, what do you think we would have said?
I mean, I think personally, I always intended to go back to where my career started, running a fund. But when we were starting these ventures back, as you mentioned, post the Distributed Ledger Group, the FAC, all these ventures, I didn't for a second think that it would be one of our funds that would be tokenizing. It was more the 20 or so blue chip fund managers that we were talking to over that journey that we anticipated would be launching their fund first.
Absolutely. You and I covered the full FAC story, or fund admin chain, back on episode 116, way back in 2020. So take me from there to here. What happened? What do you think you learned? And how did that lead to Lingfeng?
So FAC, just as a recap, started off as a consortium, really. We brought together not just all the fund managers, I think there was 10 plus leading fund managers, but we had about 6 or 7 of the core fund service providers, transfer agents, and some of the exchanges. And the collaborative effect or approach definitely worked, and it reached some learnings, but I think we were a little bit too focused on trying to look for operational efficiency across the end-to-end value chain around funds. And I think that was a little bit of not a mistake, but at the time that's what everyone was focusing on. And in hindsight, it's not really that feasible, to be honest with you. I think there's still DLT will be outshone by AI in terms of driving that operational efficiency. What we realised on the journey is that the real benefit once we get there is that we can improve distribution, inclusivity, and hopefully secondary trading when the market eventually has enough momentum to provide that secondary trading in the funds industry.
Yep, I get that. And that tokenization is, unless you're able to sell more because of it and that you increase that liquidity and distribution, it's just tokenizing for the sake of tokenization.
Absolutely. I think a large number of the tokenization projects are with the intention of either marketing, raising profile. I've always said right from the very start of doing this, I had listened to others, that the tokenization is of an asset. So you need to be very keen to invest in the underlying asset in the first place. Tokenization is a means to do something else, hopefully in the best interest of the investors, on top of the strength of the asset. So the underlying investment case should come first.
Distribution in private markets has been broken for decades. Why hasn't anyone fixed it before now?
I think it's definitely been pockets and improvements over the years. Get tokenization for a second. There's definitely been fund structures and platforms that are enabling the opportunity for whether it be pension funds or individuals, obviously appropriately vetted individuals, to access private funds. And that's fantastic. Far too much capital only being available to a small number of investors that meet what is quite stringent criteria in the old model. And then secondly, that capital's locked up. So it's not just about making sure that more people can access it. It's actually been able to free that capital up to be used and not be locked up in these funds for 5, 6, 7 years, or whatever the lifespan of the private fund is actually offering the investor.
I get that. It's a structural problem with the whole market. You're very clear that DVF is a venture fund first and a tokenized structure second. Why does that framing really matter?
Anyone who's investing in anything will learn the hard way. Even when I was a technical trader, you don't just become good at it straight away. You sort of have to make mistakes. And on a personal level, I've invested in quite a few private funds, venture funds, and you end up 3, 4, 5 years down the line and you're thinking, well, hold on a minute, was this the best use of my capital?
Absolutely.
And on a personal level, that Lingfeng, who, as you said, GP, I know how strong they are because they invested in some of my earlier ventures. So I know how strong they are. I don't know how strong their morals are as well, how they supported me through some of the financial crisis as well. So they've got a strong track record. So that's the first thing you should be looking at, is the track record of in this case, VC, before you get involved in their traditional or tokenized investments. What I'm much more interested in is, okay, so let's not oversell this. We can, because we've got the valuations of all the underlying, we can calculate, and we do calculate on a monthly basis, the valuation of our fund. So let's get that calculation into a platform, a marketplace, an exchange, whatever you want to call it, and to allow those investors to have the opportunity to buy and sell at the valuation we're doing it on a quarterly basis. So, but what we want to do is we want to be just the first of many. We want others to hopefully adopt this model, because from an investor point of view, it's not about DBF. They want to have more opportunity than that. So if you can fast forward and envisage numerous funds, tens, thousands of funds doing the same model, then on a quarterly basis, you've got that opportunity for that secondary trading. And in our instance, we're partnered with Archax. They've got it means you don't have that fragmented service. They've got the FCA badge. They've got the broader services so that we can go to market with a end-to-end solution with the appropriate transfer agent that understands this marketplace. And in our instance, we're launching it on the London Stock Exchange, DMI, because in my view, there's no more better and neutral party than London Stock Exchange to enable this to go out into the marketplace for other investors to find. So it really is exciting that we're just a sort of drop in the ocean here, but we're leading the charge. We've got a model that works end to end, and we're completely transparent.
Yeah, that's great. And you and I connected for the second time back in 2018, just at the same time that I was having chats with Graham Rodford from Archax. And tell us a little bit more about the role of Archax in the overall model.
So I think I touched on it earlier there. They've got the FCA regulation. That's key. But they combine with that the broker plus the custody capabilities. They've got the sort of institutional credibility that comes with that. But we can go to market with a minimum number of players. That means that we can provide what the investors need. Less of an investment amount to come in the first place. Make sure that they're still KYC'd, AML'd as required, and then allow them to have more transparency in what we're doing, and then give them the flexibility, hopefully, to get in and out of that trade much better than 5 or 6 years. It's a practical liquidity and transfer model that we put together here. VC 3.0.
Yeah, I love that. VC 3.0. And that's kind of the elephant in the room, is that venture is not suddenly liquid, right? It's that, but it sounds like what you're getting at here is structured transferability is the real thing.
But it's exciting to see that the industry is moving forward to see how we can ensure that we, as a fund manager, can have our fund on multiple platforms without the investors either being locked into a particular set of rails. And again, coming back to sort of give Graham and the Archax teams some more credit. They're thinking about that. They're making sure that they got themselves plugged into other areas where investors want to do what they want to do, buy and sell at the agreed level of risk.
And then looking at the investor base here, who is this actually for?
I think there's 4 buckets of potential investor into the DVF. The first one is anyone who's long crypto is looking for diversification in the portfolio. And this is a sensible way of getting diversification into a very solid VC in Lingfeng. And also the model for the DVF, we've got access into proven companies we've already invested in Singapore, Hong Kong, America, Europe and mainland China, and we're able to passport these companies over into the Middle East or Europe. And some of them already got contracts. So we've already got well-established companies that we've already got contracts once we passport them over. So it's quite a robust investment opportunity. So those that want to diversify their crypto long, or even crypto native asset managers that are looking for that diversification, I think we are going to slowly see some of the pension funds coming under a little bit of questioning from more and more customers saying, what about the digital assets crypto space? Then rather than get into something that's maybe seen as more risky, then this is a more proven opportunity. Another group would be foundations. So we might be wrong, but we believe we're changing the way that VC, and you want to take a stretch on that, other funds can be managed and traded. So any foundations that get involved in what we're doing early, it makes sense that others, when they start to copy what Lingfeng are doing, they've already got the rails locked in. That's a phenomenal opportunity for the foundations to get involved now and work with themselves in Archax. So I said three buckets, and I would say that there's still the opportunity for traditional investors that are savvy in what we're doing. I get a little bit worried when I've got investors happy to talk at length about tokenization and what we're doing, not that inquisitive about the underlying. For me, that's sort of a little bit of an alarm bell that perhaps we're doing something wrong, or we've got the wrong type of investor there. We want investors that are fully clear on what our underlying fund is doing and our portfolio is mandate is.
Investment strategy first, right? And, that can be a real hurdle, is when you start talking to folks that may be more interested in learning about your technology than they may be in learning about the actual strategy of the fund. The real hurdles that you have left to clear here?
The entire industry, the area is still suffering from a credibility hurdle. There's just so many things going on out there that I can't get my head around why people are doing, never mind investing in the tokenization side. But zooming in on what we're doing, the liquidity expectations are still a hurdle. They're still a good investment anyway. But we need to see the proofs in the pudding, whether these secondary trading windows are actually going to be at the scale that we hope. Venture's never going to suddenly be a liquid asset class just because the token exists. We can improve the transferability, but true liquidity still depends on market participation and also the price discipline around it. Regulations is something we need to keep a close eye on. We're very happy that we've thought this through end to end and for 10 years. I'd like to think that quite a few of us get some lessons to throw in there, but you've got to be uber careful in this space about how the investor on board and the custody, the transfer rules, the reporting, everything hangs together in a way that you haven't just solved now, but it's going to be able to scale, and you're not going to find yourself in 6 months down the line having picked the wrong partner. I'll stress this a lot. People say it doesn't matter which blockchain you use, etc. Yes, it does. Be uber careful which ones you get involved in, because some of them will lock your assets, your customers, into chains that mean that you can't actually get the market efficiency that we're looking for in the mid to long term.
Brian, April 21st, you're ringing the bell at the London Stock Exchange. Big moment for you?
Yes, it's a big moment for many people that have been involved in this journey. It's a big moment for Lingfeng to expand what is a strong traditional track record into the digital asset space. Now, hopefully you can get there yourself. Many people that are in that room have been involved in chipping away at this so that we can have tokenized funds that provide better liquidity and distribution. So this is hopefully the start of many, but it's a big moment for myself and many others in there to just see that we are coming out the other end of a long journey.
It has been a long journey indeed. And Brian, it's been a pleasure talking through this with you, and we'll hopefully see you on April 21st in London. So thank you.
Much appreciated, Pete.
And to all of you, check out the show notes on moneyneversleeps.ie or on whatever player you're listening or watching on for all the links to get in touch with Brian and learn more about the Digital Venture Fund and also VC 3.0. Or you can just reach out to Brian McNulty on LinkedIn, as he's quite active there. Till next time, don't forget to follow or subscribe wherever you get your podcasts. It helps others to find the show, and it means a lot to me. See ya.